If you're in a trade right now, take a pause. If you haven't analyzed the markets, don't move. This might be what you need. This is the Mind of a Trader podcast where we cut through the noise, focus on execution, and break down the mindset behind every move. This is where discipline meets strategy. I am your host, presenter Ali, and this is where real traders sharpen their edge. Let's get into it. And of course, today we are joined with one and only Oipo the trader, and is here to actually talk to us about his strategy, his journey, and all he's been through the game. Welcome, and please introduce yourself.
Thank you. My name is Oipo Kevin, but you can call me Oipo the trader. That is how I'm referred to by most traders. Yeah, thank you.
So I'm interested to know your trading journey first of all, because it is one of a kind and it's very unique. From having to quit being a school teacher to actually venturing into forex trading. Share some light on that.
Okay, I think my trading started around 2021 June. It was just a random ad that popped up in my browser. It was talking about trading and something new, so I decided to check and find out what exactly is this thing. So I read that story. It's been a good journey. What I read that day, it was talking about option trading. So the same day, it was like a broker sponsored ad. Mm-hmm. So that day, I decided to log in, create an account. As much as I didn't know what I was doing, I decided to create an account, and then after that, I started practicing immediately with the demo, just clicking buttons randomly to see.
Buying and selling.
Yes, just seeing what is happening here, based on the simple instruction that I read from that particular ad. Mm-hmm. That popped in my browser. So I did that until in the morning. Actually,
the whole night.
Yes, that ad came at around. I discovered that ad as part of my browser. You see those ads that when you click them, they launch in another tab.
Yeah.
Yes, tab. So I discovered that it was around midnight. Mm-hmm. What happened that night is I didn't sleep. The story was so interesting and mind-blowing that somebody can make such amount of money within the shortest time possible. So what I did is I decided to do exactly what is being discussed in that particular ad. And that is how I created that account that same night. As of morning, I was trading, though as much as I didn't know what I was doing. Mm-hmm. So that is the origin. So I started by trading that option for a while, about a year.
Trading them?
Yes. Of course, I was trading real money also.
Oh, okay.
Yeah, but I was always quick to cut my losses. And then in the process, I opted to go and learn on YouTube as usual. Mm-hmm. You know, it all starts with you going to YouTube and finding out what exactly this thing is. Mm-hmm. Because I can do research personally. So I knew how to do research. So I started now doing research and digging deep into what this thing entails. Yeah. So that went for about a year plus. And then now, that was now 2022. So in the middle of 2022, that is now I discover
Forex.
Not Forex, binary.
Okay.
So I discovered binary, started trading those digits over, digits under, for nearly 6 months. That is when I realized that by the way, in the process of trading those binary, I even decided to learn how to program the HTML language. I programmed those bots that you see they are being sold online. I could program some of them. So I realized that the only way to make money in binary is if I sell the bots, because in binary the house has been made such that you cannot win against them.
Yes.
So you can only join the other people in selling the bots to make it, and that was really going against my values. So I say that if I must make money by selling bot that I clearly know is not going to work for most people, that is when I decided that this thing is not for me. So that is how I again now decided to go the route of Forex. Of course, in the process of discovering option, I learned about Forex, but to me it looked a little difficult
and hard, yeah.
Yes, at the beginning. But then deep down I knew that could be the real thing, because of how I was coming across most people who are successful through it, but I hardly see people who are successful through binary
and options, yeah.
and option trading. So eventually I decided that let me cut my losses short, move to Forex. In the process, I gave out all the binary. Actually, I gave all the bots out, and I told people that if you can trade, I gave out like 40 bots. Some of them I bought, by the way, from the online space, especially from top binary traders back then, before all of them transitioned to trading gold. Currently, if you're very keen, you realize that most of these people who used to trade binary,
They're not trading.
yes, they're no longer doing that. They ventured into gold and other things like account management.
Yeah.
So I decided to join Forex the real way. So that is how I started now learning again for fresh.
Yes.
Until to date. So that has been the journey, not something extraordinary. Usual blowing of small account. You fund $10, $20, $50. You blow them. You fund $100. You blow, then you go back again. But then the good thing is that I ended up finding a mentor who really helped me a lot.
Yeah.
And that is how the journey has been smooth. Of
course,
course,
before you talk about
yes,
the mentor and the mentorship that you went through, let's a little bit talk about what you are doing while you are learning about trading. You are a teacher.
Yes.
A high school teacher, per se.
Yes,
What are you
yes.
teaching?
Okay, I studied mathematics, chemistry, teacher, high school option, that is in Masinde Muliro. So I used to teach. I used to teach both physical classes in school, the ordinary schools we have, and I also used to teach online.
Yes.
Because in the process of teaching, I ventured into online writing. So I did that until I even offered people free course, by the way. I used to teach people for free. I've taught more people, about 40 plus people, how to write. So I would do those chemistry stuffs, but now online to people who are interested in learning chemistry. So when physical became demanding, I transitioned to online teaching. Same thing, I teach chemistry classes. I used to get classes of chemistry from people in UK and the US, sometimes even in Germany, the people who take English options.
Let's venture a little bit into the transition from being a school teacher to actually now venturing into Forex. How hard or easy was it, and what actually motivated you to actually just make the switch?
Okay. So at around 2018, I decided that I'm done with the physical teaching. So I opted to go for the online. In the online, the problem is we are operating in different times.
So you're talking about the online classes?
Yes,
yeah.
the online teaching.
Yes.
Online classes. So I was teaching people, but you see, since I'm teaching people from the US and UK, that time difference was really a big problem for me. So there is no sleeping. People who do online writing with accounts, they know that there's no sleeping at night. That world was really draining for me. So I said that as much as I'm making good money to survive, more than teachers make, more than even the principal, during high season, people who are watching this and they are online writers, they know that. So it was extremely draining for me. I said that this is not a life I want to do. Imagine from 2018 to 2022, where now I opted to take Forex very seriously. So that is when I said, okay, I can forfeit that job because it's not long term, it's not sustainable, it's something that I can't do while in my 40s, 50s. Yeah. So that is how I decided to go back to Forex, and that has been it. So I say that let me just transition this side as much as it may take me time, but that is the best option to do because this is long term, and then it seems that it will solve most of my problems because my dreams are bigger than what I can imagine.
So did you have like a tough time making that decision, because you already have something, it's making you money, and now you're venturing into something new that you've not actually made money from?
I wouldn't say that I had problem per se at the beginning, because at least I had something that was going on in my life as a source of money, as a source of income, sorry. So it was easy to just roll over this side.
Slowly but slowly.
Yes. The only thing I did is to scale down significantly, in the online writing space. I really scaled down. I used to make good money. I said that let me just make for the survival option, for the survival bit, and then focus all my energy into trading. Yeah, so that is the transition I made, but it was gradual, slow, and then eventually, last year, I think the last time I did any form of writing was this year a little bit, because I still get clients to today who still trust what I used to do for them, so they'll still look for me, and then I do it. But I fully quit last year.
Okay. Now you were to mention you mentioned about mentorship.
Yes.
Take us through the stages that you went through, or the process you went through when it comes to mentorship, in terms of Who did you meet? What did they teach you? And do you feel like they had an impact in your life?
Okay. Now, the truth is this: if you want, like I said last time when we were in Sarita, that if you want to learn how to cook, you go to a chef, go to a cooking school. If you want to be a teacher, you go to a teaching school. That is the same principle I took when I wanted to learn how to trade. All I did was to look for a mentor. Of course, at the beginning it was a gamble because everything seems glittering in the online space until you meet the reality when you join the mentorship. So it was a full or roller coaster process, but then eventually I made it. So I started by looking for. I think my first mentor was called Loop Projection. I don't know if he still exists today. So I paid him about $300, and then I joined his mentorship only to realize that he's not even there. I don't know whether he quit mentoring people also because I joined.
After paying?
Yes, after paying, he disappeared. And then he's from UK. And then the problem with UK is that you cannot.
Time zone as well.
Yes, time zone is a problem. At the same time, I think there were so many students that he could not attend to each one of us. So eventually, if you want him to attend to you, you have to do special booking or you have to add in more cash to get his time. I didn't have that money to be splashing. So unfortunately, I tried to learn as much as possible, but eventually I had to look for somebody who could hold me hands-on. So I looked for a certain lady called Rita Strayed. Back then, it was when she was beginning. I think it's nowadays she doesn't even do the things in the online space. So I learned from her also. The problem is that also she was also an absentee mentor. She could disappear for 3 months.
Go and eat your money, then come back.
Yeah, so I realized that also here, unfortunately, I've not gotten a good mentor. And then there's another guy from US. I also paid him. I think I paid him about $500. For him, I really had high hopes on him. The problem is that he was an Indian struggling with English.
Accent.
Yes, he was struggling with English. So at that particular point, I also realized that, this one is also gone. Yes. So I decided that, okay, let me leave that one. So the last person that I ever paid his mentorship was Rick the trader.
Yes, Kenyan.
Yes.
Yes.
So when I decided that now let me go the Kenyan route, so I opted to take Rick the trader as my mentor. And truly, Rick was a very good mentor, to be honest. I know I talk about him most of the time when I'm with you.
Yeah.
Rick, I know maybe you are watching this because you know Presenter Ali. Rick was a very good mentor. At least he was hand-on. And I even have some video that I posted online somewhere about it was me and Rick, him explaining stuffs. Rick was the person who introduced me into the deep demand and the supply and demand concept. Now, the only problem that we had with Rick was that by the time I joined his mentorship, he was transitioning to support and resistance.
Yes.
And that is something that I'd already ditched because I'd already watched enough courses on it online. So unfortunately, I could not proceed with the mentorship.
Yeah.
Actually, back then he was charging 40,000. I don't know what he was charging right now. So I only paid half. After I paid half, he quickly transitioned into support and resistance. When he transitioned to support and resistance, I realized that now our goals do not align.
Yes.
So I decided to move on and now start trading on my own because I'd already learned enough to make my own strategy. And then the concept I learned from him were good enough for me to start my own way of trading.
Yes.
So I combined everything that I learned from these people, especially from Rick, where he taught me a lot of psychology. Rick is very good at psychology. So I took all those plus all the technical analysis I'd learned for many years, combined them, and then started coming up with my own strategies, making trial and error. I think my transition to profitability took a relatively longer because I was left at the point where I needed him the most.
Yes.
When he transitioned to support and resistance, yet I joined him because of SMC. So I had to now go the SMC route alone. That really took a lot of time, but eventually I figured it out through trial and error to eventually being able to make my own strategies, to trade independently, and that has been the journey. But then the most important thing is that I did not just learn from the mentors. What I used to do back then is that if I don't have money to pay your mentorship, because some mentorships are very expensive. Let's say $500, $700, $800, sometimes even.
And for a beginner, that's crazy
Yes.
money.
Yeah, and then I'd also scaled down my online writing career.
Yes.
And I was no longer interested in going to teach the physical classes because they were paying me not more than 15,000.
Yes.
Yet in online writing, I could just do that in a day.
Yes.
So I decided that let me just go. Let me just pick a mentor, for example, on YouTube, who only deals with chart analysis. I'm not interested in the lifestyle influencers. So I would go pick somebody's channel that talks about trading, and then I download all the videos, even if there are 200 videos. I download all those videos. Even that is what I did for Rick's case. Rick used to post a lot of chart analysis on his page. So what I did back then, they already only posted about 40 videos. I downloaded all the videos. Then after downloading all the videos, I started watching the videos from the first video they ever posted, because people improve the strategy as time passes. So I watched those videos from the beginning to the end. The end means the most recent video. So I would see the development of this strategy over time. So that is what I would do in most occasions. That is why I have watched people like ICT, model 2022, which is the most popular one, and other models from 2022, 2024, so on and so forth, 2023. I've watched all of them because I would just go download, sit down and listen to rants of ICT throughout.
Wow. You mentioned something that is very important and it's key for any trader to actually be successful.
Okay.
Lifestyle versus value. But before we mention that, I want to let you guys know that we have officially launched our own Nairobi Forex Training Institute. Located at Aiden Plaza, Ngara, we have an exclusive December offer where instead of the previous $300, right now we're charging $200. That is for physical classes. We're also charging $120. Consider we're also charging $120, but previously we were actually charging $200. So I want you guys to take this opportunity to come to our School of Trading, which we've actually launched. That is Nairobi Forex Training Institute. Mezzanine floor. Location details are in the description, and the number is actually in your screen. If you're looking to step up your game into trading, either you're a beginner or you're an intermediate or you're struggling in seeing profitability, come say you're looking for Presenter Ali, come say you are looking for Oipo, and you're going to be greatly helped in your trading journey. Let's talk a little bit about what you just mentioned. Value versus lifestyle. You are smart enough to look for value. You are smart enough to know that you don't want to focus in the lifestyle. Why specifically did you take the route of actually checking on the value other than actually checking on the lifestyle?
I think it squarely goes to the fact that I wanted to learn, not to be inspired by their lifestyle.
Yes.
See, there are people who are more focused on people's lifestyle than how they ended up reaching there. So if somebody is posting chart analysis and at the same time they are posting lifestyle, I don't have a problem watching your content. But then if you're only posting lifestyle alone,
and you do not show us
yes,
the how,
and you do not show us how you trade, how you reason the trade, definitely I'm not interested in watching your program, because there are so many lifestyle YouTube content creators,
yeah.
yes, that I can do that. So for me, I chose people who are teaching me something rather than people who are inspiring me, because I could get so many inspiration from other people. So I opted to go with the value, which is what I was seeking as of that time. Currently, I honestly don't watch anybody doing analysis because of how much I've realized how rubbish these things are. So back then, that would be my focus, to watch how people trade, because I was looking for a mentor. So when you're looking for a mentor, you watch how people trade, and then you see their thought process. You see if you like their strategy. That is what I used to do. But currently, I think now I'm transitioning to the opposite. If somebody is showing values and at the same time teaching people something, one or two, even if it is psychology, then I do watch the channel. So that is how I opted to go with the value rather than the lifestyle.
Looking at the hours that you've invested into mastering your craft,
Yes.
how many hours would you say you have invested?
I think on a daily basis, I would spend about 3 hours to sometimes 12 hours just on the chart. And in the chart, all I'm doing is analysis after analysis, trying one strategy that I've learned here and there. That is why when somebody talks about any strategy, it clicks in my mind. And if you talk about all these online people, just come for reviews. I'll give you these online people. Nearly all of them have tried their strategy and I've backtested them. And that is how I've spent like, so you can do the math, since 2022, 2022, that is when I transitioned to Forex. Since 2022, I have learned so much, and I used to spend at least 3 hours to 12 hours a day, sometimes even more, because I want to finish this person's videos as quick as possible. If I download 200 videos, some of them are still even in my laptop. I have not even deleted them. They are taking about 30 GB. I have to watch them as quickly as possible so that I can learn. So you can imagine, sometimes it's more. So let's say roughly
over 10,000 hours.
Nearly there about. Okay, yes. Unless I do the math, it's close to that.
Yes, and they say that for anyone to master anything, you have to spend at least 10,000 hours. That's why we are with the best. Is actually the head of training at Nairobi Forex Training Institute, and of course, we are going to talk about your strategy. But one of the key things that I think that are important to mention is many people always say that I use this strategy, I use SMC, I use ICT, I trade trading lines. These are strategies that are everywhere and people know about them. Take us through the process of you coming up with your own strategy. How easy was it, or how hard was it?
Okay. Okay. The first thing I need to tell people is a strategy depends on who you are. If you are somebody like me and Ali, who want attention to detail, just know that you will have a long way to develop your own strategy, because you will be poking holes in nearly every strategy. And something surprising is that the strategy you will be poking to find out its limitation, or the ones you're seeing their limitation, it's working for that particular person. So most strategies do work, but the question is it working for you? So there are criteria for creating a good strategy, and the first criteria is know who you are. If you're somebody who values attention to details, just know that it's going to take you a little more time compared to any other ordinary person who picks something and goes with it. So that is the first criteria. The first criteria is you have to find a strategy that is repeatable. Can you repeat it in the market? Does it repeat itself in the market? That repeatability and not discretion, that is what makes a good strategy. If you're not able to repeat it, just know that it's not a good strategy. At the same time, now we get into the technicality of the strategy. And the first thing is a good strategy should have sort of top-down analysis. So I don't know which time frame you prefer. You could be a swing trader, you could be intraday, you could be a scalper. Yeah. So once you know yourself that you want to pick either of them, that is when now you pick the time frames you want to work with. You can work with 3 time frame strategy, you can work with 2 time frame strategies, or even 1 time frame. If you're working with 1 time frame, most likely you could position yourself into a mid time frame. For example, a 1 hour time frame. By the way, I found trading 1 hour alone, no higher time frame. Just looking for supply and demand and key zones, and then we look for entries using a certain concept called M and W pattern. They call it head and shoulder, or double bottom. Those things do work. I'm not here to discredit anybody's strategy because I've backtested those things. So you need to have some sorts of higher time frame, top-down analysis. Yeah. After that, you need to have a defined entry. Make it as clear as possible. So once you have that entry, that is what you need to try and backtest. Unfortunately, the only way to know if your strategy is good or not is by backtesting, first of all. And then after backtesting, you go and forward test. That is how my thought process plays when I want to make a strategy. Because if I just look at a chart for some few minutes, I can come up with strategy just because of the number of hours I've spent on the chart. So that is basically how I look at a good strategy. If you can tell me that you have some sort of top-down analysis, you choose your time frame, either 2 time frame or 3 time frame approach. Let me give an example. A 3 time frame approach would be for an intraday trader, would be 1 day. Then you go from 1 day, you go to 4 hours. From 4 hours, you go to 15 minutes. You're done. For a scalper, you would go from 15 minutes to even 1 minute and you're done.
15-5-1.
Yes, 15-5-1 and you're done. Or you could go from 30-5-1.
1, 15-1.
Yes.
There's actually a formula that I was taught by my friend, where you just have to say, if you're coming from 4 hours, your next should be 15, then the next one should be 3 or 1. If you're coming from 1 hour, the next should be 15, and the next should be 1. He had a very interesting formula, N minus M, but we won't talk about that right now.
Okay.
I'll teach you about that after this.
Okay.
But now let's talk about your strategy. First of all, what's the win rate?
Okay. Ideally, on the backtest, the win rate is high. Why? Because on the backtest, you don't make mistakes.
Yes.
And then at the same time, you don't miss setups.
Yes.
But then in the real market, where now you are forward testing, or now in live market, where you have to be patient and sit on your hands, there are so many mistakes that comes there.
Yes.
At the same time, you will be missing trades.
Yes.
So
you will be tired.
Yes.
You will be worn out.
Yeah. Sometimes you'll be traveling, you end up missing a setup. And you see, when you miss a setup, and that setup is the one that goes to take profit. And in most occasions, if you're watching this thing, you realize that the setups you miss are the ones that goes to TP. But then the setups you sit and wait throughout, those ones are the ones that hit stop loss.
Yes.
Even they happen to meet to date. I still get stopped out on setup that I wait the whole day. And setup that I miss, I realize that they went to take profit smoothly without any problem. So the strike rate really strongly varies. At backtesting, I am playing with nearly 60% win rate at backtesting. Then at live testing, sometimes I go as low as 30%. But then the thing is this: it is risk to reward that keeps you in the game and protecting your capital, like I said last time. So it is that risk to reward, because by the way, I do target about on the minimum side, I target a 1 to 4, 1 to 5. In most occasions, I'm going for a 1 to 5 risk to reward.
Yes.
So that means that statistically, I have upper hand in the market.
Yes.
Even if I take so many losses, I'm comfortable because I know just one win away from recovering the drawdown and back to profit.
Yes.
Yes. So if I say 50% strike rate or 40%, it means that for every 10 trades, I expect that I could lose 6 or even 7, and then win 3 or 4 or even 5.
Which will cover your losses.
Which is going to cover my losses and give me something more on top.
Yes.
I'll do the maths once we go to the chart.
Yeah, what is the minimum risk to reward that you normally take?
Okay, minimum risk to reward that I go for, that I backtest, is 5R. 5 risk to reward. So it means that if I'm risking $100 for ease of calculation, I am going for 500.
Yes.
And if I am...
That's for an intraday or a swing trade?
Both of them.
Okay.
And for and if I'm in drawdown, if I get 1 to 4, I am out, because no matter how sharp you are in the market, drawdowns will always weigh on you. So when I get into any drawdown, the first thing that kicks in my mind is to recover, and then deep down I know that with at least a 1 to 3 risk to reward, I'm still beating the market. So for that reason, 1 to 4 is just a bonus. So that is the only time I deploy 1 to 4 risk to reward. Sometimes on the worst case scenario, if weekend is about to pop and I'm seeing that I'm having some 3R, I can close. If 3R is going to recover me the losses, I forfeit the 2R, which is going to be on profit, and then take 1 to 3. But if everything is normal, you give me a count that is even, there's no drawdown, the first trade I shoot for is 1 to 5.
Okay.
Yes.
We have people say that I don't trade on Mondays, I don't trade on Thursdays,
Yes.
I don't trade on Fridays. I thought you don't trade on Fridays.
I don't like trading on Fridays. Why?
Yes.
Because statistically, it gives me the highest loss.
Yes.
Yesterday we were traveling and I took 2 losses.
Yes.
Why? It was on Friday. It So definitely any Friday that comes, I know that I have to turn down a reason more because most of my accounts are blown on Friday. So statistically, my age keeps telling me that I should avoid trading on Friday. And if I'm trading on Friday, I should risk little. Because Fridays are always my worst days, to be honest. Why? Because of something called candle range theory. A candle range theory, if you study the anatomy of the candle, you'll find that there is OHLC, which is open, high, low, close. That week that is always formed, if you go to the 1 week's time frame, that 2 weeks time frame, at the end of the day, which is the last day of the week, is always Friday. So you realize that is where we form that week of the weekly candle.
Yes.
It is at those particular time that I get fake signals.
Yes.
So that is why I always reduce my risks during Friday trades.
Yeah, and I mean also the market is kind of slowing down. The momentum is not there as from Tuesday, Wednesday, Thursday, and I also agree to that. Now, explain your strategy. Of course, you're going to do that in the charts, but I'd like you to explain it to us first of all. Theoretically.
Okay.
What is your entry like? How do you do your top-down analysis, and how do you find your entries? Do you snipe at a specific time? Take us through it.
Okay. Now, basically, I have two major strategies that I trade: the intraday / swing, and then we have the day trading setups.
Yes.
So somebody may claim that, why are you trading two strategies if one of them is profitable? The truth is this: I trade PROPFIRMs, and with that, it comes with a lot of restrictions. So there's an African proverb that goes that if the bird learns to fly without perching, then the hunter has to shoot without missing.
Okay.
Let me explain that in terms of strategy.
Okay.
PROPFIRMs comes up with very ridiculous rules here and there every single day, even the best PROPFIRMs. So when I'm trading big accounts, I know very well that if my trade is going to transition to weekend holding, I'm going to have problems with some of the PROPFIRMs. At the same time, if I'm trading news, if news is about to come and I'm in position, I may have problem with some of the PROPFIRMs. So it means that the PROPFIRMs are the ones that made me. I was comfortable trading just 4 hours and so on.
Yes.
But then with 4 hours comes a lot of challenges with other PROPFIRMs that I want to trade. So the 5 minutes entry strategy, I trade it on a PROPFIRM that is a little strict with rules, so that I just get in and out. So what is happening here is that I'm that hunter trying to shoot without missing.
Yes.
Because these people comes up with rules each and every day. So if I choose a PROPFIRM and the rule does not favor the 4-hour strategy, then I go with a 5-minute strategy, so that I don't offend their rules. That is why I trade it. But if you ask me today that there's no PROPFIRM, I'm only trading my personal account, I'm comfortable placing it on 4 hours alone. Because in 4 hours, I'll be able to scale in position. If we get a drop and then we get another entry, I scale in a position. So you realize that in one setup, I could scale in, like, let's say 4 times. So by the time I hit take profit, I have scaled in multiple positions such that I'm walking out with more than 10 R in just one single position. But you see, you cannot do that in most PROPFIRM. You cannot scale. So that is why you see I developed 2 strategies. If you're only trading one strategy, you realize that you will be limited to trading other PROPFIRMs, and we want to scale. So that is why I trade these two setups. So let me walk you through based on the question.
The intraday?
Yes, let me walk you on the intraday.
Or the day trading?
Of course, today I don't want to reveal everything.
Yes.
But I can just give them an overview of.
Just talk about one, and then which one are you going to talk about?
Let me tell them the 4 hour.
The 4 hour. Let's talk about the 4 hour, and after he does the 4 hour, if you are interested in seeing the intraday, okay?
Yes.
Comment the word intraday, and then make sure that I bring him again. So let's go.
Okay. On the 4, actually the one you talked about is the
intraday.
Yes.
So comment the day,
yes.
word day trading,
yes.
so that we can be able to call him again. Let's go.
Yes. So on the intraday one, I start from the time frame that most people don't look at it. 1 week.
Okay.
Most people don't look at 1 week. So actually, market takes money from majority and gives to minority with money.
Yes.
So for me, I don't have that money to move the market.
Yes.
So I join the boys with the money. Big boys like hedge funds and big retail organizations, the likes of Citibanks, JP Morgans, those companies, those big institutions, they take their entries maybe let's say in 4 hours. This is speculation. Nobody is certain. But you see, the analysis starts from 1 month. Like sometimes you see you start on 1 month, and then sometimes even in years, and then they go down until they get their entry. In most occasions, their entries are a higher time frame.
Yes.
Like
Higher
1
than
day.
4 hours.
Yes.
Like 1 week.
1 day, 1 week.
Yes.
So I personally like to go with the time frame that I'm sure the big boys will be checking.
Yes.
And that is 1 week. So what I do is on a 1 week, I look at rejections. I look at areas of support and resistance. I look at all those confluences that people have. So once they are taken out, that is when I enter.
Because I find this interesting because, of course, we shared this with you.
Yeah.
And I mean, the support and resistance that is being created by 1 week, you can never compare it with the 1 hour. You can never compare it with the 4 hour.
Yeah.
It is a very, very strong point of interest. I'll just call it a point of interest.
Yes,
because the support that is being created at the 4 hour, the resistance that is being created at the the 1 week or 1 month, that is a point that is so hard to break. So you wait for the raid.
Yes.
Take us through it.
So what happens is this. Like I said, by the way, if you hear me talk about a strategy, that all strategies work. Yes, the only thing that makes strategies to fail is the entry. So I look for areas where most people have been taken out.
Yes.
After they have been taken out, that I can see clearly that this move is clearly a raid. Because before the market moves, it tends to move in form of V-shape in 4 hours. It moves in V-shape, a very sharp V-shape. If it is going to buy, it starts by dropping and then moves. That drop is what liquidates people. If you check on the 1 week's time frame, that is a week.
Okay.
So I just know that the next week, that is a strong rejection, and if you realize that zone will be having a structural high or low, where SMC people call it change of character, some people call it inducement, people call it head and shoulder zone, a retest of something. So that is the area that I wait for that to form. I'm going to demonstrate because it looks complex when I'm explaining.
Let's do it.
So let me after I've looked for those V-shaped reaction, that is when now I deploy the entry, and my entry follows a very simple criteria: momentum. Momentum means momentum is the best when you're looking for entry, but then for the long-term move, we look for trend.
Yes.
People say that trend is your friend. I agree, but then they don't talk about entry. The only time that trends should be applying is when you're looking at the higher time frame perspective. But then for the entry, I always advocate people to look for momentum, because you need that momentum push away from your entry.
Yes.
Once you get that push away from your entry, you will see that your nerves will calm down and you want to have pressure.
Yes.
Yeah, but if you see market playing around your zone for a very long time, definitely you're going to have pressure. So that is why, for me, I always go for momentum first. There are so many entry criteria, by the way. An example of them is the so-called change of character in a lower time frame, which do work, and I've traded it. But I just prefer momentum, because with momentum, you have an advantage of trade moving in a direction quick enough before it can start pulling back. So I think we should go to the chart.
Yes.
And then we check it out.
Yes.
So let me just move this a little bit here. Now, when all of us come to trading, let me look for a path tool. A minute, path tool. So this is the path tool.
Yes.
So when everybody comes to the market and they want to trade SMC, all they're taught that when the market is moving higher, it makes new higher highs like this.
Yes.
Higher highs, and this becomes an uptrend.
Yes.
That is an uptrend. Of course, how I wish it could be moving like this.
Yes.
This is what we expect.
This is the general.
This is
general.
This is the general expectation.
Yes.
But this is not the reality.
Yes.
the reality looks a little bit complex than this. Even in the market, you can't see this.
Yes.
So what we know is that we always we see this as a break of structure. We call it boss. And then from this break of structure, when we see another break of structure up here, that marks that the trend continues.
Yes.
And then the trend continues, another break of structure, another break of structure. Now,
And so on and so
yes,
forth,
so on and so forth. If you want to deploy a true SMC, whereby you look for break of structures, change of character, you look for IDM, you look for engineered liquidity, so on and so forth, then these ones, they will just come to us at our trading platform,
Yes.
our trading institution, and you will learn all this.
Yes.
For now, let me just walk you through the basics. So this is what everybody is taught. And then what next are they taught? They are taught to look forward. They are taught to look for 50% pullback.
Yes.
Or pullback at a break and retest. So let me explain those concepts using examples. So if you look at this, after break of structure, people are told to mark the low that created this high. So this is the low that made this high. So you wait for pullback into 50% around this zone, and from this zone you can take your entry.
Yes.
At the same time, if you check this zone here, you realize that this is a break and retest. This is a clear break here, and we just wait for a retest, and then we continue. At the same time, in this zone, SMC people call it order flow. What you're seeing here is called an order flow. So people are told that you can wait for market to come to the order flow, and then when it comes here, you look for entry. You take it in the direction of the trend.
Yes.
All those ones are okay. You also have other point of interest here, which are fair value gap, order block, you have breaker blocks, you have propulsion block,
yes,
so on and so forth. But the thing is this, the problem is the repeatability of those concepts. And that is why, for me, I wait for a sweep of this whole move. I wait for a sweep of this zone that people are expecting, that this is the last zone, that if market invalidates, comes and trade below this zone here, the market has invalidated this setup. So when your setup is invalidated, that is when I deploy my entry.
Okay.
Why? Because all those concepts that I've just talked about, everybody was buying here. What happens when this market invalidates this, they are protected low.
Yes.
They have all taken stop loss, and what they are thinking is that the market is now back to bearish trend.
So like if there were any fair value gaps, they were mitigated.
They were mitigated, gave a small reaction, and they got stopped out.
Yes. Okay.
So unless you're using fair value gap, but then you deploy lower time frame entries to confirm if the fair value gap is going to hold or not.
Yes. Okay.
So once we see this sort of break of structure, and then we see this liquidation of this structural low or high, depending on the direction, that is when I deploy my trigger, because I know very well that everybody has been stopped out, because that is what all of us are taught at the beginning of this thing.
Yes.
So, and the
smart money knows that.
Yes, and the smart money knows that everybody is going to buy around this zone. So for me, I wait for everybody to be taken out, and then I enter. Why? Because here is the deepest discount you can ever get.
Yes.
People say that buy high, sell low. I don't know if I've said this correctly. You sell high, and then you buy low. That is a concept of supply and demand, which is premium and discount.
Yes.
So if you look at this, you will see that discount. If you look at this here, so this thing is misbehaving a little bit. Okay, let me move it slowly. There we have it.
Yeah.
So let me remove these other parameters and just stick with the dealing range tool.
Yes.
So let's remove these Fibonacci zones. So I've traded Fibonacci, by the way, at the beginning of my journey.
That's DD style.
Yeah. So you can see that this is a 50% zone. Let me just move this here.
Come with there.
And then let me return the 50% mark. That is the 50%. So we know that this you sell at the premium and buy at discount. But then not all occasion, the best repeatable model is not when it comes to the premium. Just wait for everybody who is waiting for it at a discount to be liquidated.
Out,
Yes. Once they are liquidated, you will get the big move. By the way,
yeah, that's the good thing about it. The move that comes after here,
yes,
is normally
is very big.
Could easily give you 1:5.
Yes.
Yeah.
At the same time, the reason why this is preferred, because in true SMC, this somebody watching this from true SMC would say that is not a change of character, that is an inducement. I agree. So you realize that in true SMC, that is not a change of character sweep, but instead it's an inducement sweep. So it is still okay, provided you look for entry after everybody else have been taken out. That is exactly what we usually do. So we wait for this liquidation here. After this liquidation of this inducement or change of character zone, you can take your entry.
So the idea is to wait for this sweep so that we can get a big move ahead.
Yes.
That is interesting. Now, can you actually show us this play out in the charts?
Okay. Yeah. So whatever I'm about to show you works in any time frame you choose,
and any currency pair.
And in any currency pair. I can even start by showing them the BTC and then I'll show them other pairs.
Yeah.
The thing is, we are mastering a strategy, one strategy. Or like I said, if you want to trade it with PROPFIRM, that is another story. But if you just want to master this alone, these apply in any time frame. Any time frame has got break of structure. Any time frame has got sweep of change of character or sweep of inducement, if you want to call it inducement. It is at that inducement that we will have support and resistance zone. It is at that inducement that we are going to have demand and supply. So, and it is at the same zone that you are going to have deep discounted price or premium price.
Yes.
So once you wait for this raid here, you will look for entry at around this zone here to take the price back, because in most occasions what are people waiting for is to take their trade at this zone.
Fair value gap.
Yes, at a fair value gap here, at an order block,
yes,
at a breaker block. So this is where they'll be taking their trades. You take that move here that they are ignoring to come here. You realize that these moves are always subtle, are very precise, and move nicely.
Yeah, and they're almost sure that they're
yes,
going to have.
And at least you are going to get a reaction, because this is a key zone. After all this raid liquidation here, there is always a move backward. Even if it's going to be a pullback, you don't know. The most important thing is to get your risk to reward and walk out of the market. Now, there are various ways of taking entries at around this zone. This zone here. After the raid, this zone here. So some of the entry criteria you could take is you could wait for a change of character in lower time frame. Let me give people time frame so that they could use it on their own. So you look for a change of character. If you don't know you don't know what change of character entails, you can study it online or come to us for further assistance. Now, the change of character, you can do this. If whatever you are seeing here being displayed on the screen, this as your higher time frame, let's say 4 hours, look for the same thing in, like you said, 15 minutes.
Yes.
Look for the same thing 15 minutes. Change of character with the fair value gap. So you have to look
on
for
the opposite direction.
Yes, on the opposite direction.
So if we are having a change of character, which is bullish on the 4 hour,
yes,
now we're going to be looking at the 15 minutes, the change of character, a bearish one,
yes,
in 15 minutes,
yes,
and vice versa.
Yes.
That is going to imply to us that the market is now
starting to reverse.
Yes. Yes.
So after this, most people expect that this market is going to go down. But then, for you, since you don't trade like them, you're a contrarian trader, you trade with the big boys. Once they have been stopped out, all you need to do is to look for bullish change of character in the 15 minutes.
Yeah.
And that change of character should be having a fair value gap.
Yes.
It is at that fair value gap, retest of that fair value gap, that you can
enter.
take your entry.
Yes.
Now, at the same time, the change of character applies in two options. There is internal change of character and external change of character. Market moves from internal to external, and then it can trade even external again to another external. It just keeps shifting. There is internal liquidity and external liquidity. An example of internal liquidity is fair value gap. Fair value gap, that gap you see in the market after a very impulsive move, that is what is called a fair value gap for people who are getting started. Now, in most occasions, you will see fair value gaps being filled, regardless of when it takes, how long it takes. So that process of drawing price into fair value gap, that is what is called a liquidity pool. So that is an internal liquidity. External liquidity are swing highs, swing lows. So after this swing low has been taken, that means that we are already having a liquidity sweep. That is why I just mark them using the letter X. Then after that, you look for change of character with 15 minutes. Now, if this thing you are doing it on, let's say on 1 day time frame, look for the same thing on 1 hour as your entry. This is for people who want to use 2 time frames only. Now, by the way, if you want to still deploy a lower time frame, you can still go to 3 minutes or even 2 minutes or 1 minute, depending on what you like. But I prefer 3 or 2 minutes from this. And then what you do is you look for now the same thing, change of character with fair value gaps, but in 3 minutes after we've tapped the 15 minutes fair value gap. Now this is the same thing. I don't need to do this. Just need to stick with these 2 time frames and still make good money. Now 1 day you can go to 1 hour and look for the same thing. Now if you're too technical, you can go down from 1 hour. You can go to 5 minutes.
So this purely depends with the type of a trader you are.
Exactly.
So if you really want to scalp through it, you can just do 15 and 2 or 3 minutes. If you are looking at swinging, you could do 4 hour and 15.
If
you're looking at day trading, you could do 1 day and 1 hour. Wow, interesting.
So this I'm giving it so that anybody who is used to trading at the pullback of fair value gap should know that there are better ways of getting bigger moves that is repeatable.
Instead of having to wait for the 4 hour fair value gap retest.
With this, you don't care whether there is going to be 4 hours after break of structure or not. What you care is that low that created that break of structure, like in this case, this low here that created this break of structure, that is what you wait for it to be raided. After it is raided or traded through, that is what I mean by raiding, you deploy the change of character in these lower time frames. Now, alternatively, if you are from an ICT background, you could use an alternative thing called CSID, which is change in state of delivery. Change CISD, change in state of delivery. It is just a change of character that happens earlier than change of character. Now, that one I'll not cover, but if you want it to cover, you can search for it online on YouTube, or you can come to us. Alternatively, because by the way, the reason why I advocate people to look for entry here that goes up on the reverse is because this is the only zone that you can be forgiven for any entry. If you even just go with those engulfing candles, in SMC we call it scope, that is the single candle order block, or you can look for an engulfing candle. Let me call it engulfing because that is what most people are used to, engulfing. You will still get good entry because you will be forgiven because everybody else has been taken out. So the price has got no reason but to pull back, either totally or just a pullback. So that is the only options, that is the entry options to do with it. So I'll show you using 4 hours, and then the one that we normally use is 1 week, and then from 1 week we go to 4 hour as our entry. And this trade, by the way, they can take 24 hours to about
to play about.
Yes, to play. Sometimes it can go as high as 2 weeks if the market is ranging. Yeah, but in most occasions, the average one is just about 1 to 3 days, and we've hit our take profit of 1 to 5. Now, whatever I'm showing you right now, all of them goes with a higher risk of 1 to 5. Now, of all these, there is a problem with this kind of entry. This entry does not factor in momentum, and for us, we trade momentum in our entry because we need the market to immediately step in. We need to step in the market when the market is ready to move. We don't want to get into a market that is ranging and choppy and therefore playing with our emotions, and that in the process we will trigger negative decisions that are going to impair our trade.
And that's why we use limit orders.
Yes, we use limit orders when momentum is ready. So the solution to this kind of entry is to deploy what is called BPR, which is balanced price range. Balanced price range. When you deploy BPR, it means that you will only get setups once the market is ready to move. You will not get fake out because you can be fake out. We can have several fake out here in lower time frame. So to solve that problem, you always try and use balanced price range. For now, I'm going to show people using change of character because that is what most people are used to.
Yeah.
Alternatively, at this zone, if you want to be deep, for people who trade SMC, SMC and ICT and are struggling, they can deploy CTR, candle. It's called CRT. Sorry, candle range theory. Candle range theory. This will give you higher risk to reward than all of these ones here. Candle range theory. This will give you the highest RR. Because if you are dealing with 4 hours, you will be looking to take your entry at the week of the 4 hours after this read. And that will give you a very tight stop loss of even 1 pip stop loss or 2 pip stop loss. Yes, or 10 at most. But then it is likely to give you several fake outs. That is why you may ask that, Oipo, why are you not using CRT if it is giving high risk to reward after a such good zone, point of interest? The thing is, CRT will give you more stop loss than BPR. BPR will only come in when the market is ready to reverse. So for now, I'm going to show you guys using 4 hours because 4 hours is what most people use.
Yes.
So I'm going to show you 4 hours and then with 15 minutes entry using this change of character because this is what most people use and I just want to make your work easier.
Yes.
Now, this is trading view. So by the way, this is a checklist. You can copy paste this checklist. If you want it, you can copy paste this checklist here and then try and see it. Now, so this is trading view and I think we could go to, let's go to this platform here that I normally use. It's called Forex Tester.
Yes.
It's a good platform and it is squarely meant for backtesting alone.
Yes.
So please take advantage of it if you are seeing this and you want to try new things.
Yes. I'm actually going to put the link on description. forextester.com for accurate backtesting and confident results. If anyone ever comes and tells you I have a strategy, you can actually learn the strategy and come and backtest it here. You don't actually have, I have many people calling me and telling me, does this strategy work? Does this work?
Yes.
You can actually, backtest the strategies. You can actually look if indicators work. You can actually, if anyone has any strategy that they claim that it works, just tell them to show you the results on forextester.com. The link is in the description. Sign up. We have an amazing discount if you get to sign up today. Let's continue.
Okay, so signing up is very simple. Just come here and then you click sign in and then it loads. After it loads, you can. So once it has loaded like this, you just create a blank project or new project. So let's go with the blank project like that. So let me call this 4 hour. This is where you search for the symbols. So in this case, let us use the commonly used currency, which is EU, and it is the most liquid, by the way, Euro USD. It is the most traded pair. So let's add that. Maybe you can add with let's give them GBP USD for the boys who look for GBP USD. Yeah. So after that, you come this side. This is just general project name. I call it 4 hour, 15 minutes entry, and then deposit. You can place the one you want. In this case, I just leave it to default, and then you can have data, by the way, from as low as 2 or 3. So let's just give it random one. So let me move and back test. Let's say from when most of us started trading. So let me just move to, you can see. Let me use 2022.
Yes.
So let me use 2022 from the start of 2022. Oh, I did not click. Sorry for that. Let me go with the 2022. That is 2013, 2023. So 2022 is here. Let's go from January.
Yes.
And then from January 1st, let's go with Tuesday 4th here. Then we are good. So it should be, start date is correct. And then time zones, you can even create your own time zones. Just
so
Google.
In Nairobi, that is UTC plus 3.
UTC plus 3. So let's see if it is there. Yeah, here we go.
Minimum. That is minus.
Okay, should be positive. UTC plus 3.
Yes.
So the rest you can leave them the way they are.
Yes.
Nothing serious. Okay,
Create
so
the
create project and that's it.
Yes.
So here you have it, and then you just click it like that, and the project just deploys, and you have a good bar replay to backtest from the time we said we wanted to start doing the analysis. Let me just start from here. Now so let's backtest the strategy, and this is our checklist. So the checklist is the first thing we look for is 4 hours change of character sweep or raid, and then after that we look after 4 hour change of character, we look for reversal 15 minutes. We look for reversal 15 minutes change of character with fair value gaps. With no fair value gaps, there's no entry. You have to wait, and then we set entry limit at the retest of the 15 minutes fair value gap, which is located at the premium or discount zone of step 2, which is here, which is in 15 minutes time frame.
Yeah.
And if fair value gap is on the wrong PDRA, let's say we are buying here, and let's say the discount zone, and the price is at the premium. We need to go to the discount. So that is why we deploy this other part. We place entry at the 60% of the whole 15 minutes dealing range. So let's go back to our tester. So let's go to 4 hours. So this is 4 hours time frame.
Yeah. And I love the fact that one of the things that you're going to look at later on is the fact that you are able to let trades just move, even if they do not tag your entry.
Yes.
But let's just focus on this first.
Okay. So the thing is, sometimes you don't need to force entries. You don't need to force entries. A good trader, a good setup should not always give you entries. Sometimes they may not give you entries. Now, by the way, there is an indicator for marking this, or you can just do it manually. Like, let's say this is the last break of structure we had here. This is the last break of structure.
4 hours,
Yes, on 4 hours. That is what we are dealing with on 4 hours that we marked here, and then this is its change of character. This is the last low, as you can see. This is the last low here that created this BOS up here.
Yeah.
So, okay, let me just, for me, I mark change of characters as X, just to mean that it is an area of interest, point of interest, POI. So once I see this raid here, I will go to 15 minutes and look for the entry backwards. As you can see, immediately we had this raid here. What did we see? You see the market. But this is 4 hours, so it means that if you're using 15 minutes, most probably you get your setup and it went to take profit. So let me see if I can move this up to here. So let's move them backward a little bit. By the way, that is the good thing about forex tester, is that you can move the candle backwards. I'm able to move them until the point that I want to show you entry, and then now we can continue with the backtesting from that point. So you can see I'm able to move this candle from this point. So it is after this raid here. That is when we deploy what? Step 2, which is
going to the 15
minutes.
Yeah.
So we go to 15 minutes like that. And what do we need to do? We need to look for a change of character. That is upward change of character. So this is the raid where the raid happened. So you look for change of character. So we just keep moving like that. So where is the high? There is no structural high. This is the last structural high. So we need the market to trade past here, leaving fair value gap. That is when we will go in. So for now, we don't have that. So we keep moving the bars like that, unless we get another low and another high. So I can. So it's all about being patient while backtesting, so that, because in real life this thing is not going to happen like
that
this
fast.
Yes. So in backtesting, it's good that we are able to move them faster, but in real life you will have to be patient. If you're not patient in trading, you will have to suffer. This is the last high that we have that we need to mark. This is the last high. If market trades past this zone, we have a change of character, because this is the last high that caused this break of structure here on lower time frame. Now, like I said, if you're having problems identifying break of structures and change of characters, always visit us, talk to us, and we will show you that. Alternatively, if we have this here, break here, it means we shall have had a pullback and then another break of structure. So this will become our next change of character zone. So for now, our dealing range is from this here to here. So we just be patient and wait for the market to do its thing. So let's see how it goes. So the market moves like that, and then did we have it? No, we didn't have this market trade below here. So just keep moving it like that. So eventually, still nothing like that. So yes. So eventually we've now seen this market trade here, that means that we have a new break of structure on 15 minutes. So we trace the origin of the break of structure. Now, I know some people are watching this and they're arguing that that is not a break of structure and that is just a structural break. There is no problem. I agree with you. All we need to do is, regardless of whether it's a break of structure or a change of character, we look for the high, or if we are selling, we look for the low. In this case, we're looking for the high that caused this structural break or break of structure. If market comes back and trade past this, that is a change of character or market structure shift if you're coming from an ICT background.
Yes.
So you can see fully we get candle closure below it. That's a break of structure. So let's just be patient and wait. Nothing much to do, and here we go.
Get it.
A very good break of structure and fair value gap. Now the entries are going to come from either we are buying, so the entry is going to come from this first fair value gap that you can see here, stop loss covering this low, that is our safe stop loss. Alternatively, we have to wait for the market and see when it will start pulling back. So at this particular point, we should be very active in the market waiting for the entry. So you can see we have now two fair value gaps. We have this fair value gap here, this one here, this one up here, and then we have another fair value gap that is down here. And don't forget that I said in the checklist you have to wait for the premium one. Yes. So let's wait for the market to see when it will start pulling back, and then we can pull the trigger. So market has started pulling back, so definitely we can take our entry market execution at this fair value gap because it has pulled to this fair value gap. Yep. The only thing is that we are going to have a bigger stop loss. So yes, there are two options here. If you don't want to reason at all, be mechanical as possible, that is your entry. And that brings us to about 37 pip stop loss.
That's close to 1:1.
This is 37 pip stop loss, and the target should be at least 1 to 5. If you are starting, you still don't understand the strategy well, you can try with 1 to 3. Now for me, 37 pip stop loss, this is 37 points. You just divide that by 10. It should give you about 37 pips. For me, I would prefer that I take at least, I lower this a little bit to, let's say, even at the end of this, and I'm comfortable missing the setup. So from this,
so we are not yet in the trend.
We are not yet in the
trend. So we're waiting for it to tap here.
Yes.
So that we can buy.
Yes, the reason why I want to do so is because I'm comfortable missing this trade and then get my risk to reward of at least a 1 to 3 or a 1 to 4 risk to reward. Yes, so this is the highest take profit we should have because this is the last high that created this low. Yes. So in that case, if it can give me 1 to 5 up to this zone, I'm comfortable lowering my entry zone because we even have another fair value gap here.
Yes.
And then at the same time, I am comfortable also risking differently if you are operating different accounts. So this will become my last entry. Now, if you have an account that you're comfortable risking up here, you can place your second trade at this here and then stop loss here.
Just move it.
Yes, so let's move it like this. Yes. And then now let's place the two trades. So this, we will target at least a 1 to 3. It's bigger one, so you can even target as low as 1 to 2, but that is not recommended. I recommend to, on the lowest end, you should always target at least a 1 to 3.
Yes.
In any setups, any type of strategy you trade, just target a 1 to 3.
Yes.
Then you can go break even at 1 to 2. You can go to break even.
So this could be in your first account.
Yes.
This could be in your second account. But if you're using a personal account,
yes,
you could have both.
You can have both. So let's place the trades. So if you want to place the trade, just click here. So we are supposed to be buying, not selling. So let me delete that. So we buy. So buys has been placed on this trade here. You can see the line here indicating buy.
We should go for this one now.
Yes. So let's move the stop loss where it should be. This is where the stop loss should be. The buy has been placed here. So now, if you want to move, if you want to place this second entry, let's wait for the price to come here, or you can try putting in the
trend higher.
So let's just deal with this one.
Yes.
Tuseme tulikuwa tushaweka SL, tuweke hii SL hapo.
Okay.
Take profit. So SL is placed here. Now to take profit, you just adjust this to 1 to here. This is here.
Make it lower. There
yes.
Okay.
They're about.
Yeah.
And leave it there, or let me just move it a little bit. Let me be precise as possible. There we have it. So this is the first trade here, which is here. It's already tagged in. If this market comes here, we are going to take another entry. So let's see how it goes. So the market comes in, it comes here. Now we can take another setup, which is another buy. So for this option here, so we take another buy from there, and then the market is currently here. So let's move the TP to here.
That's okay.
And then we move SL to down here, all of them.
Yes.
All of our SL are here. That is what is called a safe stop loss. So let's see how this one goes, as much as we've already seen how it goes. So all of the trade have been tagged in. So let's see, it's nearly taking us out. Just be patient. If you're taken out, you look for the same thing, which is 15 minutes break of structure upwards.
Yes.
So that is how it starts to move, nearly taking us out. You just be patient and wait. Okay, so let's move it very fast. So you are nearly out of drawdown. In the first position, you're already in profit. So let's move the speed. By the way, we can now move the speed. Let's see. Okay, so you can see the bars are now moving faster. We are almost getting to take profit one. So at this particular point, this has moved to a 1:2.
Wow.
So if it is at 1:2, we can break even. Breaking even means we bring
stop loss to entry.
Stop loss to entry at this zone here.
So even if you're taken out,
you are good to go.
Yeah.
So okay, let me just also bring this one to break even. We can break even both of them. Now if you hover here, you can see it's running in profit plus something. It's written there plus something. So let's see if this thing goes to break even. If it goes to break even, you look for another setup. So let's move it faster. Let me even add more bars. So let's move it like that. Okay, we need to go to break even. Yes, it goes to break even, as you can see. There's nothing. This first position is the one that lost something small, but then the other one goes to break even.
Yes.
And then,
but if we had not, let's assume we had not moved to break even. Let's see how it plays.
Yes. So let's see how it plays out. Okay.
There we go.
So if you move to break even,
you risk being stopped out.
Yes, you risk being stopped out early. So you can see this one we stopped out early, then eventually it went to take profit. This one was 1 to 5. Should have gone for a 1 to 5. Where is this? This is 1 to 4. This at this particular point here, it went for a 1 to 4. Maybe you can still move the thing and see if it goes. So this one eventually. Okay, there we go. So if you didn't move to break even, market never came back to tag you out. And see the way you're protected all the time.
So what I actually love about this tool is the fact that you can test any strategy that you ever come with. You just come here, use different time frame, let it play out, and test as many times as possible to actually know if a strategy works. And this one will make it very easy. It is a tool for every trader, whether you're a beginner, intermediate, and you really need to know. Yes, my mentor taught me about SMC. My mentor taught me about trendlines. My mentor taught me about ICT. You just come to this tool, back test it, and you'll be able to see how it plays out.
Yes. Let me go to 4 hours and see eventually if we get another setup. So you can see if you moved it to 4 hours, it could even move quicker. All your TPs, especially this one here, if it comes here, that one you should walk out. So you can see,
wow,
eventually it went to a 1 to 5 if you didn't break even. Of course, if you broke even, those ones do happen. So after this, we've seen that this is the last low. So let's delete these ones. Let's delete this one here. Now there is this high here. This is the last high we had. So this high can be considered a change of character high. Why? Because it had some sort of structural break down here.
Yes.
So you could look for a reversal in this using 15 minutes at the same time.
Yes.
Or if you see that the market is moving upward, you don't mind. You don't want to look for a counter trend. You can wait for this here to be taken out. This is the last high. This is the last low. Sorry. This is the last low, which is the change of character that created this break of structure up here. So you could wait for this sweep here and then go and then take a buy again. But then with this, you can still be able to take a counter trend.
Yes, which
now,
A sell.
which is a sell.
Yeah.
Now, the same thing is you use the same thing. You use 15 minutes change of character
That is a bearish one.
Yes, so let's try that and see if we'll get a pullback. So this is where it was raided. So after this external raid, you expect that the market will give you a small reversal or a big one. You never know which one is going to give. So let's see if it gives any. So that is the last high. Then let's see if we get a big move that causes break or structure downwards or change of character downwards. You can see the market has started ranging, showing possibility of either continuing up or down.
Or reverse.
Yes, so let's move that fast. You can see the market still moves upward. Still don't have trade. Why? Because this is the last low. This is the last low here that we needed a break of structure down here. We did not get any break of structure, so we keep waiting. So this becomes our next low.
Yes.
Our next low. Now in higher time frame, I don't do this way. In higher time frame, I don't like counter trend unless it's a total soup. Total soup is a concept from ICT where you wait for market not to close past a structural high in higher time frame. You can do that in 1 day. You can do that in 1 week. You can do that in 4 hours. So somebody in 4 hours may say that I don't want to counter trend. That means that they don't want to take.
You just want to move with the trend.
With the trend, yes. So for us, if you're trading one pair, you see you're going to have a problem of waiting so long for a setup to take place. And for that reason, that is why you would look for a counter trend in this case.
Yeah.
So we look for this as a break of structure, change of character downward, and then we take the entry. Let's see if this goes. So this keeps on going up. Okay, you see divergence there. Let's see if it's going to be the beginning of the pullback. Now we have a structural break here. This is not a break of structure, this is a structural break. Why? Because the market did not close past this high here.
Yeah.
So we move our high. This is the problem of trading one pair. I know people say that trade one pair. Sometimes you can trade two pairs. You don't want to counter trend at the same time. You don't want to force entries.
Yes.
In this case, the market is very bullish, but we are looking for what?
Sells.
Why? Because we are trading. If you are trading one pair, if you are trading multiple pair, because this system applies to different pairs. You can backtest, but I recommend that you trade major pairs. So in this case, we still have to wait our change of character down. You can see we have a change of character, but this is not conclusive. Why? Because it's a structural break. Market did not close below this low.
Yes.
So we would nicely look for sales here, but the market has not closed. So let's see if we get a close. Okay, let's see. We get a close down. See if we get a close down. Yes, we did get a close down, but the fair value gap has already been mitigated.
Yes.
So in this case, you don't need to take the setup as much as it may work. So let's see how it goes. Okay, the market again does what? Moves past this. So this becomes our next low. That is how to move these setups, the setup, and be patient. Anybody without patience in trading, just know that this is not for you. You have to be very patient with the setup and let it play. So this is, now we see a very good break of structure.
Yes.
There's a fair value gap here. So in this case, that is why I say that now you will have to wait for the market to come to the premium zone. Why? Because premium zone is anything above 50%. That is what is called premium. So let me just remove some of the labels. So we don't need this, we don't need this, yes, and this Fibonacci levels. So let's apply that. Let's click apply. Let's click apply, and they are removed. So we want to look for setups here.
So we want to wait for the market to come here.
Yes.
So that we can be able to take our sell.
Yes. You can wait. You can even take at the retest of this fair value gap that was already formed. But just know that there is possibility that it may not come back here, and you should be comfortable with that.
Yes.
At this fair value, there's a fair value gap there, two fair value gaps. So I've just marked one, and let's wait for the price to come there. Alternatively, this market can just react to this fair value gap and keep dropping.
Yes.
You just let it go. That is why you need to trade at least one or two pairs so that you don't become emotional and FOMO.
Yes.
Because FOMO makes people lose a
Which
lot
it
of
did.
money.
It didn't go back there and played out.
Yeah, the market didn't go back, and it still played out. If it went down here, this would be a very nice risk to reward. This is that, and then the stop loss would have been up there. Take profit 1 to 5.
Yes.
Risk to reward, you can see if this was a 1 to 5, you would be running in profit right now.
Yeah.
Yeah, so let's see how it goes. Okay.
Oh,
Eventually, it drops even further.
they have gotten 1:8 or something.
Yes, 1:8 or something. Yeah, thereabout.
Yeah.
So in this case, this is a setup that clearly we've missed, but you can see the direction is really working well. Why? Because we are taking trades when everybody else has been liquidated. Let's go and try another one again.
Yes, let's do the last one.
Okay, so let's reset this. Now let's trace it. This is the last low here that caused this whole breakout structure. So we cannot buy here. Like I said, most people now are marking these fair value gaps. They are marking this fair value
Waiting for it
gaps.
to be retested.
Yes,
to go and
retested to buy. And what are they being done? They are being butchered because they are, first of all, they are buying in the middle of the zone of the whole of the dealing range. The dealing range low, the dealing range high. So they are buying at the chopping zone. This is where butchery takes place.
That's where the chopping board is.
This is the chopping board. So that is mistake number one. Number two, the fair value gap is on top here at the premium zone. We need to only buy at the discount. That is why I was selling on top here, because this is deep premium.
Yes.
So another fair value gap is here at the premium. At the discount zone, there's a small fair value gap here. It's arguable, not exactly fair value gap, but there is one here. Anybody who was looking for lower time frame here is probably going to be butchered. So in that case, for us, what we need to do is to relax and wait for them to be dealt with thoroughly. Again, there is an order block here.
Yes.
People are waiting for a reaction in this order block. What do we need to do? We wait for them to be butchered. At the same time, there is an inducement here. There is an inducement here. So people are expecting that after this inducement is taken, they will buy. Again, they still be butchered. They are already been butchered here. There is an engineered liquidity here. This is called engineered liquidity. Engineered liquidity is the last internal high or low that was created in that expansive move leg. Like in this case, this is the expansive leg, the pro trend leg. So this last pullback that was created, that is what is called engineered liquidity. So some people are waiting for the engineered liquidity to be taken and then they buy. Still, we don't do that. We wait for them to be dealt with and then we can move. If price decides to move from this point, you just let it go. It's not a must.
Yeah.
So you can see the way the market has pulled back, given them a small reaction, and what happens?
Butchered.
So that is how it operates. You just wait for the market. You can even trade this internally because we've seen a break of structure here and there's a high here. So you could wait for this high to be taken and then you sell. This is internal price range and this would be a TP. Now something funny is that rarely, in most occasions, rarely will the market pull back to this deep premium and fail to take this low. That is why we wait for them at that particular zone. So let's see. You can see the way all of them were butchered. All of them were butchered, and that is how they lose.
Yes.
Look at how many points of interest that were butchered here. There is order flow here.
It's fair value gap there.
Yeah, let me mark for them. There is a very big order flow in here with the multiple order flow. This is the first order flow. People who are looking for entry here, change of characters, all of them received butchery. Now, the order block boys also got a small reaction here. Price butchered them. Now again, people who use propulsion block, like let's say this is the last propulsion block, which is just an order flow in other terms, all of them were butchered. So that is why you always need to wait for the liquidity zone. So let's assume that, let's look at this. This is the last low here. The price can even come to this low. It doesn't matter. But the good thing is that most of those people now are seeing that this market is back to a bullish trend. But in real sense, this market is not yet back to bullish trend unless we see more development in the lower time frame.
Yes.
At the same time, what happens here is this. The market has already built in what is called trend line liquidity. If you look at this, there's a very big trend line here that is forming.
Yes.
This is a liquidity zone because the market has pulled back, tapped it. Pulled back, tapped it. Somebody who has traded trend line, you know that trend line does not hold forever.
Yeah.
What happens is that it exhausts immediately. It is clear.
Yes.
Immediate trend line is clear for everyone.
Immediately you can see 2 to 3 touch points.
Yes.
Just know you don't trade it.
Yes. That one has been exhausted. Trend line is good when you don't see it. Immediately you start seeing it too much, especially on lower time frame like 4 hours, unless it is on monthly or 1 week or even 1 day. this is going to be invalidated, and that is where you can now deploy trend line. This is where you can wait for an exhausted trend line. Once it is exhausted, you wait for a break of that trend line and retest. You will be at the extreme zone. Let's see how it displays here. So what do you see? The market still butchers everyone.
Takes out this.
Yes, takes out this low here because there's a very big range here. Yeah. Now the reason why not all of this change of character will work is because of what is called higher time frame. As much as we are seeing that this was a higher time frame, 4 hours here, if you go to the 1 week, for example, you realize that there is a low that needed to be taken. This is the last low that created this high. So this high here, this low here, is the liquidity that needs to be taken. So once it is taken, you can still get in. That is why we use different time frame analysis. So don't beat yourself if you see that our Oipo said 4 hours and 4 hours is not holding. Why? Because your higher time frame could be someone's lower time frame. Yeah. So in this case, you can see the market is still going down and the trend line is still holding. Why? Because there is a low here that needs to be taken first. And once it's taken, you will see that the market starts to move because it's a bigger time frame. You can see this is the flooding that happened, and then from this I expect now a reaction. That is why I told you that at that I only use 4 hours as my not 4 hours, 1 week to do this thing. To do all this thing that I'm telling you here is on 1 week, because it is after this 1 week rate everybody has given up on this, and you can see this is a very big liquidity run. Everybody is seeing 4 hours break of structure. If you go to the daily time frame, it is still break of structure, and everybody seeing that the market is back to is bearish. Yeah. But they are forgetting that there was a 1 week liquidity zone that has been created. Now, if you look at this zone also, you will see that this zone is a very big support and resistance zone. This is a very big zone. Yes. That people are looking for touches. Touch here, reaction, touch, reaction, touch, reaction. When it is clear, just know that everybody will be liquidated fast. What has happened here? A very big purge. And that is after this purge, that is when I will deploy a BPR.
The missile.
Yes. You can see that everybody is seeing that this is a very clear downward trend. But in this sense, the market is going to react and look for and break this, possibly break this soon. Trend. Yes, or later on. So let's see how this market goes. Let's see how it goes. See, now we are looking for a reaction. What happens? What happened?
So ideally here we could have looked for the 15 minutes change of character.
Yes.
Then it retested, then we go.
Yes. What has happened?
I mean, guys, it can never get easier. I think this has been one of the simplest strategies that have been explained by Oipo, who is one of the finest and also certified by me traders, also tutors at Nairobi Forex Training Institute. You can actually come to our offices at Eden Plaza Ngara, mezzanine floor. Talk to us and you'll be assisted to move from beginner to intermediate to advanced. I want to thank you so much for your time, for coming to actually share this. Many people have been asking, what strategy do you use? We use this strategy to trade in our free and also paid VVIP communities. The links are also in the description. The number to contact us if you want to come to our class are on the description. And if you also want to use the forextester.com, I've put a link in the description where you just get an amazing discount if you get to purchase it, to test out all strategies that you will ever come across as a trader. So thank you so much once more for coming. If you guys want him to come and explain how he does this now with the day trading strategy, please comment 5 minutes entry, where you just get into the entry and in the next 5 to 10 minutes, sometimes 30 minutes, you hit 1:5 and you're done. If you want that, please comment 5 minutes. You can comment day trading and you can comment the word class. Thank you once more for coming. Really appreciate your time. Okay. This has been amazing. This has been always coming back to teaching me what to use in our trading. And of course, I cannot even I don't even know how to thank you enough for coming to teach this, because this is something we've been holding for long, saying that we are not going to teach this. But there are a lot of things that you can actually learn if you come to our school. The numbers are also in the description. What you have to say is the biggest trading advice that you can give them right now as we finish?
Okay, if you are a beginner, just know that it may take you a while, but then it doesn't need to take you forever, because if you have a good mentor, not necessarily us, not a must you learn from us, but we've given you option. So if you're a beginner, it's going to take you a little bit of time. Just look for a good mentor to mentor you, and it can take you between 1 month to 3 months to start seeing results. If you go the lone wolf route, it's going to take you about 6 months. If you're an intermediate and you've been trading some of the strategies I've talked about here, try and backtest what I've just shown you. Try and integrate it into your system. Anything that I said that I do not explain, go and do research. If you're an advanced trader, just keep working on psychology, which I know is a big issue, and risk management, and we will still, all of us, make it.
Yeah, and we also always have people saying that, Ali, you've been scammed by people, promising fake classes, promising fake mentorship. Now you have an option. You do not have to call me and tell me that you've been scammed. This has been the Mind of a Trader podcast. I am your host, presenter Ali, alias Ali Trades AE. I'll see you guys in the next video.
The Mind of a Trader podcast, where we outthink the market.